After a crazy few weeks in the market, if you're wondering what your favorite stocks in the market overall is going to be doing this week, then this is the video for you. And it's been a pretty crazy ride. Even Vader wants to sit shotgun for this video to try to figure out what in the heck is going on with the stock market this week. Well, we're going to dive right in. I'm going to explain to you guys what is likely to happen, and don't skip any part of this video and strap in and sit tight, because I'm going to show you a very powerful strategy on how you can gauge the market and what it's almost guaranteed to do tomorrow. Tonight, you'll be able to run this strategy. It's even Vader approved. The market has been a crazy, wild ride, but we're going to go over everything in this video on what's going on with the market, why Navitas has pulled back, and why other stocks have pulled back and sold off as well. It is manipulation at its finest, and I'm going to break it all down for you. We're going to cover everything in this video. Strap in. We're going to get started right now, and if you are confused by anything in this video and you want to make the profits consistently like my students are making right there that you saw on the screen, I would love to help you. The link to get started is below. To get started with my one-on-one coaching, Discord access, as well as the Ask Corey section, and all of my trades that I'm putting out even right now in a bear market. Let's strap in. Let's get started. We're going to cover everything right now in this video. Everything in the stock market is manipulation. Vader will even tell you he can smell it a mile away. And he's got a good nose, and that's pretty much a fact. So first thing I want to address about the market is you have to understand that it's pretty much manipulated. Now, you might be skeptical of this. You may say, Corey, there's no way this is manipulated, or there's no way it could be like you're saying it is. Well, there's one thing we know about money. Anytime anything involves money, there's not really any trust. There's deceit, manipulation. There's always going to be games that are played. Money is a very untrustworthy subject, and anything involving money is going to involve pretty much the most deceitful mannerisms known to earth. Anytime there's money involved, there's always going to be deception, deceit, manipulation, lies, you name it, it exists. Do you trust anything involving money? Would you drop your car off at a mechanic shop and pay them in advance in full before the work's done? If you were buying a home, would you buy the home and pay for it in full before you've walked in the home and seen it? No. Money involves a form of distrust because everybody wants it, and it treks on the human nature of greed. So of course there's going to be manipulation. There's always manipulation. So don't be so naive as to trust money. And the market involves money. This is the big issue right now. The market involves money. This is why you can't trust it. With the interest rates that are happening right now being cut at a quarter basis point, we're looking at getting another quarter to half point in December. Well, that's not happening most likely. That's what the feds are saying. It could be January or February. Didn't you notice something particular? The stock market's pulling back pretty heavily, but on top of that, interest rates are getting pushed out to January. Why would that be? If you really look at the correlation here, you're seeing that we got a quarter basis point cut already. We were supposed to get more, like a half, which is why the market initially pulled back. And now they're pushing back the next basis point cuts of 25 or 50 into January or February. And the market's pulling back heavily. Even though Meta crushed earnings, it's pulling back. Other stocks like Microsoft crushed earnings. ARM crushed earnings. The market is pulling back. Same with AMD, had its best earnings in over a year, and it's pulling back. And all these companies had great future guidance. They're all pulling back while the government shut down and interest rates get pushed further out to January or February, the interest rate cuts. What does this illustrate to you? Well, quite simply, it illustrates buying time in order to get money into the market cheaper. You have to understand, when interest rates are high, 5%, 5.5% like they were, people like me invest my money in SPACs accounts. We get paid 5% per year on our capital. So when you have $3 or $4 million, you're making a lot of money every year, pretty close to 200 grand a year to do nothing. You're not going to really risk your money to invest when you're making $250,000 a year to do nothing, right? Well, that's what happens. When interest rates get cut to 4 or 3.75 or 3.5, it doesn't make it worth it to have all your capital in a SPACs account or treasury bonds or yields. So you go back into the stock market, which means investors and big institutions bring money into the stock market. We saw an influx of that happening back in May, in April. The stock market crashed. SPY was down to 500 and change. Meta was under 500. Microsoft was in the mid threes. And then 200 billion plus came into the market, and it flew sky high all year. That money was coming in. The rest of that money needs to come into the market, and it can't do that at all-time highs, can it? And with interest rates being cut in January or February and getting pushed out, they're trying to force this market as low as possible. which is why I called Michael Blurry in my previous video. That wasn't a mistake. It was a joke. Michael Blurry the Burry. He is so blurry visioned and blind with his manipulation and fear mongering. This is what they do. They fear monger and they drive the markets down. I've already analyzed Meta stock and its price to sales, which gauges its future potential guidance on making profits. The current sector is at 21. Lower is better. Meta is at like an 8 or a 9. Meta is extremely undervalued. And I'll let you guys know a little something right now. Meta just got upgraded analyst ratings a few weeks prior to the crash or the pullback, and it was 900. 2 upgrades, one to 850 and then another one to 900. Yet the stock is trading close to $600. And not only that, Meta has over $50 million in dark pool for 2027 and 2028 on long leap options. So this will show you the manipulation that has happened on Meta. The same thing with Navitas. They did focus more on servers and AI. However, the issue with Navitas is not just that they focused more on data centers and moved away from other sectors, which means their horizons are a little bit narrowed short term, and there was some losses and some cash burning issues. But overall, the sector that they're in is very prominently strong and has a very strong future. But their sell-off with Navitas wasn't completely Navitas's fault. In fact, it was 50% or more the market and the manipulation. You'll be sitting here saying the same thing in 6 months as students said last April and May when the stock market crashed. You look at Navitas at $6, $7 right now, or $8, and you're like, wow, this stock dropped, but in 6, 7 months from now, it's going to be $10, $12, $14 or higher, and you're going to miss the opportunity. This is a long-term investment. I told everyone that Navitas could pull back to $10 and end up pulling back to 9 and then to 8 because of the market, not just Navitas. We have a record-breaking length on government shutdown, so you can't blame Navitas. I did call the stock at $6. It did run to 18. You had plenty of opportunity to make profits and dollar cost average, and you should never put 100% of your portfolio and try to get rich quick on a stock. This was your fault if you did this. I've said it in every video, 10% of your portfolio, no more in any one stock or one sector. It's a very risky market. If you did 10% and no more than 10%, you really didn't lose a lot of money because it only pulled back 40%, and 40% of 10% is 4%. So if you have 100 grand, you only lost 4,000, which is not a lot of money to lose on $100,000. It's proportional. This is how you invest. If you didn't follow these rules and you tried to get rich quick, or you try to dump it all into one stock, it was your mistake. If you missed the exit at 17 or 18, it was your mistake. And by holding long term could turn out to be very profitable. But you have to understand how to invest properly, which is what I teach in Discord. Another thing I want to point out is Meta. I called out the Meta trade in my Discord before I mentioned anything of the sort on YouTube, and it ran. It was a big buy into the news, but the event sold off. But they are manipulating these November options on Meta because all the dark pool bullish activity is going forward, and yet they're holding the stock down to fry these options right around government shutdown, right around election time, and also right around interest rate cut issues that are looming in the air, as well as tariffs. However, these options do look pretty strong if you dollar cost average. I have students that dollar cost average on the Meta calls, and I will tell you that if you averaged the right way on Meta, your break even on these calls would be around $6.35, which is only $15 away. So basically, if Meta goes to $6.35 at all this week, pretty much all losses are abated. So just to let you know, the right dollar cost averaging is very powerful. You can actually turn a losing position into a winning position. If you guys want to see a video on dollar cost averaging specifically, comment below. If I get enough comments on that, I will make that video. It's a very powerful strategy. And as an example, if you have a very high average cost, let's say $7.50, and the stock drops to $6.20, with the right averaging on the options, you can get your average cost down to $6.30 or $6.40, which would allow you to significantly reduce losses as long as you time the bottom and the consolidation correctly, and the stock makes a little decent run up. It only has to be a bounce upwards of a few dollars. When you really think about the grand scheme of things, $15 of a bounce in comparison to a $130 drop, and you could get back most or a big portion of your losses, maybe even all of it. Looking at the VIX here, I told you guys in multiple videos in the previous few weeks and months that with this consolidation on the VIX and the big bounce here, and then it dropped, came back up, came down again, that we were likely to get a VIX hike and then it would come back down. When you look at this graph, I drew this graph, these zigzags or this sine wave right here. I drew that like 2 weeks ago. And I showed you guys right here what the VIX would do. You can see right where I started it would have been on October 31st. So it's almost 2 weeks ago that I drew this line. And I said the VIX would come up and then back down. And the VIX has come up and it's come back down. It could hike up this week and then drop. But either way, going into the end of this week, next week, the VIX is going to taper off. This is just how the VIX moves. It's like a sine wave. It's psychology. Human beings think the same way. They trade the same way. They behave the same way. Therefore, these patterns stay the same way outside of black swan events. So when you look at this, if I was to shift this over, my drawing just a little bit, you could see it lines up perfectly. It comes right up in the middle, comes back down this week, and then comes back up into next week. This is very typical. This is how the stock market works. The VIX is sitting at 19. It's likely to hike a little bit this week because we do have data. We have core inflation rate, which is going to be coming out on the 13th, which is Thursday. And then on top of that, we also have Friday's PPI month over month retail sales, and of course, the retail sales month over month and PPI month over month. So this is happening this week. Not a lot of data. It's near the end of the week. Monday, there could be a little bit of a VIX spike, but I'm thinking that Monday, the VIX is going to drop and the stock market's going to move up nicely Monday and Tuesday. I think that late Tuesday or maybe Wednesday is when the market's going to start reacting to the data for Thursday and Friday and get a sell-off. We could have a very decent bullish run, a very small one, likely tomorrow and on Tuesday, and the VIX could drop into the low 17s, high 16s potentially, because this is pretty much how the VIX usually works, but it's going to have to break through this 100-day average right here around 1866. So we're waiting for that to work out, but I will be showing you a strategy on how to gauge this market tomorrow, and you'll be able to do it right now while you're watching this video. We're going to look at a couple of stocks. We're going to look at Navitas. A lot of people talking about Navitas. This is an absolute buy at $7 or $8. It is below my AVP. It goes back to my old AVP, which was between $6 and $8.20. Between 6 and 8 was my original AVP, and that's what the stock is back to. So it's a buying opportunity right now. Stocks don't run this high and then sell off to this price point and this much of a drop this quickly for no reason. And this is market manipulation. The price currently on Navitas, well worth $7. Trust me on this one. What I will say on this one is right now it's $7.82, and likely 6 to 8 months from now, the stock is going to be considerably higher. And you're going to look back and say, yes, I'm glad I bought this stock. You always buy stocks that have sold off and are cheaper and consolidating. Do your due diligence and you look to buy those stocks. You don't buy at all-time highs. You buy when the stocks are sold off or cheaper or pulled back, and you dollar cost average. Shopify also has a very strong earnings, and they're likely to continue to work up with the market. Microsoft had a good earnings. They're likely to consolidate this week and have a nice little bit of a run upwards. It could sell off more if bad news comes out. So you always have to be safe and prepared. We can see that Meta right here has pulled up from 603 up to 625, and it's likely Meta will pull up into the 640 range this week and reject this recent high. And if it breaks it, I would be surprised, but it could do that. But we are looking at a market that is trying to recover from a lot of bad news and a lot of rough sentiment in the financial sector, as well as interest rate cuts, the economy, the government shutdown, manipulation, and of course, the tariffs with the Supreme Court is also an issue. SE is also having earnings this week, and it's looking like it might have a nice run Monday and Tuesday, but it could be a buy the news, sell the event type deal, so be very cautious. Nebius also has earnings this week. Same exact thing I said for SE. Be very cautious. It could run up. Be very, very safe with buying the news and holding through earnings. You might want to sell the event if you buy the news. We have to see how things go Monday, but be very cautious, track carefully. Apple looks very strong. Their most recent earnings was a beat. They got dividends that were for Monday. So just be aware it's the dividend X date tomorrow. So the stock is likely to pull back, and it could pull back 265, 264, maybe even 260, because after dividend stocks typically sell off. I'm not saying this will for sure happen, but it's something of a very typical nature. Looking at Oracle, this stock has sold off almost all the way to pre-earnings. This is a buying opportunity on Oracle, in my opinion. And I have leaped options on this stock, and I have a very good dollar cost average where my break-even price is $2.49. So I'm not really concerned with this at all. Oracle is strong. As soon as the market recovers, this stock's going to be in the $2.80, $2.90 range. Oracle is also going to be overseeing TikTok on the TikTok deal. So when tariffs come to conclusion with Trump and Xi Jinping, so when the tariff talks come to a conclusion with Xi Jinping and Trump, this is a part of the deal with TikTok, and Oracle is going to oversee that. ARM also has had a very good earnings. They did miss on EPS. That was, a very slight miss. Although ARM just recently had earnings. They had a great earnings. They absolutely crushed. And we have leaps options going out to January the 15th, 2027. This stock is likely to recover slowly and pull its way up into the spring. It's a very strong, very potentially strong play there on ARM. Very good company. Like I said, crushed earnings, and they beat the revenue, and their guidance was also very, very strong. If you're looking to hedge in the market when the market is down, you want to look at the S&P HD. Very strong S&P HD, QQQ, FXI, FXE. You also want to look at VTV, VYM, other stocks like this, the VAW, and of course the VOO. These are hedges. The KBWY is also strong. And I also love the real estate VNQ and the growth VUG. These are all good. Vanguard Total World Stock VT is also good. These are dividend stocks, and you can make a lot of money on them, especially when you're hedging against the market. There's a treasury yield one, the bond market BND. You could also look at that. I've made thousands of dollars in SPHD over the past few weeks, and also the dividends are going to be good. They're $18 per 100 shares. Tempest AI is another good one. It was a most recent pick of mine. It looks like it's going to have a nice bounce upwards this week, but it's a long-term play anyway. Looking at Tesla, very strong performance even in this market. Tesla does Tesla things. It's always been that way. When the market's flying, Tesla's selling off. When the market's selling off, Tesla's flying. It pretty much does its own thing based on Elon Musk and this new shareholders backed performance plan for CEO Elon Musk. And with this shareholders backing a performance plan for the CEO, Elon Musk himself, this is something that's keeping the stock up, in my opinion, or at least partially. But this stock typically does its own thing anyway. SoFi, another great stock, very stable through all of the sell-offs, holding $28, very strong. I told everyone last year to buy it when it was $6. It's a very, very strong stock, even in market conditions like it is right now. And I think that this is still one of the best performing stocks going forward. SoFi is a great company, great CEO. Palantir had a sharp sell-off from 221 down to 170. And I told everyone in my coaching call in Discord this could likely happen. I've said it in multiple videos in the past that Palantir is likely to sell off very hard at 200, and it did just that. It's probably going to have a nice run up a little bit this week, maybe to 185, 190, and we'll see if Palantir can continue to trek northwards and hold a higher price. And they crushed earnings, and they continue to crush earnings over and over and over again. They absolutely destroyed earnings, which is great. Guidance was also good, but you have Michael Blurry Burry, who is consistently fear-mongering and hedging against Palantir. I don't know. Not very intelligent, in my opinion, to hedge against a company like Palantir per se. But at the end of the day, manipulation at its finest to get the market to pull back nonetheless. Reminds me of Jim Cramer. Do everything opposite of what Jim Cramer says. The guy's been wrong about everything over the past 2 years. He said Palantir, SoFi, and SoundHound were all meme stocks. He actually said Palantir was a meme stock like last year and said he wouldn't advise buying it. Yet the stock ran from $15 to $200. And he told everyone to buy NVIDIA last year. And yet NVIDIA was $147 in July of 2024. Fast forward to now, it's only went up $40. So you've seen like a 22% return and 25% return on NVIDIA in a year. And yet Palantir has seen a 1,200% return, and SoFi has seen a 500 or 600% return. So that just shows you right there how inaccurate Jim Cramer is. But I'm not bashing on him. I'm just pointing out a lot of these people are manipulators of the market. I would be very cautious over believing what I hear and see. So I told you guys I would show you how to gauge the market tomorrow, what's almost guaranteed to happen, and show you how to gauge that right now so you can get ready for tomorrow's move. And I'm going to show you guys exactly how to do that. It's very powerful. But first, if you're looking to grow your portfolio, you're losing money, making bad decisions, you're confused by anything I've showed you in this video, I would love to help you. The link to get started with Discord is below. If you want to make the profits you're seeing on the screen that my students are making right there, I would love to help you and show you how to do it. We made a lot of money back in April when the market crashed and it ran in May. We made a lot of money on stocks that we bought on the low and on the dip, but that is very likely to happen again this month, next month, or even in January or February. So if you want to take advantage of this, now is the time. Take action now. Let me show you how to grow your portfolio. The link is below. You get access to me and Ask Corey section, all of my trades, my dark pool data, a very strong growing community that will help you grow and learn, all of my full 6 hours on-demand training course and one-on-one coaching, and our weekly coaching calls during the live market open. I would love to show you how to change your game, grow your portfolio like my students, and help you achieve your goals to live your best life. The link to get started is below, but don't just take my word for it. Let's take a listen to what my student Josh had to say. How you doing, Josh?
Hey, Corey. Good to see you again. Thanks for having me.
Of course, absolutely. And a lot of people have joined the Discord over the past year and done so well. And the truth is, you're the inspiration for all of them joining, most of them, and growing their portfolios. But you were my first student from 300,000 to 800,000. But you hit some speed bumps psychologically, and we had to crack that.
Started just like everyone else. I came across Corey's videos pretty early on. I was just really impressed with your approach to everything. I've actually explored other ones before as well, and a lot of them don't work. And so I can honestly say from the results themselves as well, but just how much you've developed me through this time period, helping me come from someone who knew very little about options trading to someone who now has that foundation and the skill set and also the psychology and mindset far surpassed what I originally set out to do. I was a victim of the market, and now I feel very much as I'm someone who's in the market, trading the market.
How does it feel to be a part of the Millionaires Club?
Honestly, it took me a minute to just understand what it meant. You know, it was one of those, dream goals that you have as anyone setting out to start to trade and do this, but nothing really changes, to be honest with you. I think if anything, now I'm really excited to accomplish my goal. Going forward, it just becomes, now let's set a new goal. It feels really good to have a skill set and have a goal and be able to accomplish it. I think everyone should take masterclass or advanced training, elite coaching with Corey. I'm really excited to keep contributing to Corey's community, joining our calls on the weekly basis, and then also being live in the Discord. I get a lot of energy out of it. We have a really great group, and it's all because of Corey. Anyone can do this. I did not expect to be someone who could become a millionaire trader. The reason why you want to work with Corey as opposed to someone else is because he truly cares. He's just as invested in you, in building your skill set and training you to become a very good and profitable trader. He actually builds a serious program. He adapts to all different types of traders, no matter what they are, whatever their own personal goals are, whether you're in the retirement stage or you're someone that's really trying to build wealth and actually become like an active trader yourself. Corey's community is awesome. We have fun together. We also share ideas and trade and that sort of thing, trading overall. It's about making money, right?
So you heard what my student Josh had to say. If you want this to be your success story, if you want to work towards goals like Josh did, and grow your portfolio and live a better life, I would love to help you. Link to get started with Discord is below, and I look forward to seeing you very soon and helping you grow your portfolio. So you want to look at the MES1 right here, MES1 Micro Mini Futures. You can see it gapped up, and it's using Friday's high as a support, which is already way up compared to the rest of the week. You can see it ran all the way up. Now it's gapped up, pulled back a little bit, and likely to run like that. It's very possible. It could pull back more, but that is really what usually happens on the S&P, on the futures. If you see right here, and you will see 6 p.m. 2 Sundays ago, it gapped up. And if you look at Microsoft right here, Monday morning, it followed suit and gapped up identical to what happened in the S&P 500. So if you really follow this, this shows you the likelihood of what's going to happen. We go back and look at this, and the stock market ran up most of the week. So with this running up like this, it's likely to have a decent run. We return to maybe 68.50 or maybe even closer to 68.75 on the S&P mini futures, which means the market is likely to run similarly, because The market opens up in Japan and China at 8 p.m. Eastern, 9 p.m. Eastern, which is about to happen. And it opens up in London at 2 a.m. So this is happening in the overnight hours. This is why this is very critical to watch. But this is looking like a fairly bullish Monday or fairly bullish start to Monday. And typically what happens in the micro mini S&P 500 overnight on Sunday almost always happens. Not a guarantee, but it's as close as you're going to get. This is how you gauge what is likely to happen in the market this week. It looks like we're going to have at least a neutral week to slightly bullish going into Monday, Tuesday, Wednesday, where I do expect some sell-offs to happen because of what's happening, with data later on this week. And of course, if the government opens up, it will be insanely good. With the government shutdown and the looming tariff issues that have come to a recent pause, things are still pretty much shaky. We need the government to reopen. We also need to have a conclusion to this Supreme Court ruling that's looming in the air over tariffs. If the government reopens and we get a resolve in the Supreme Court tariffs that's favorable to the current tariff situation, the market could absolutely fly this week. It very likely would. So be prepared for that. Right now is a buying opportunity when there's fear, when the sentiment in the index in the market is fearful, all the way into the fear like it is right now. It's a buying opportunity. Maybe it's a longer term hold. Maybe it takes 2 to 3 months. But when there's lots of fear and lots of selling, buying good companies now, dollar cost averaging the dip and holding, when the market recovers and explodes north in another bullish run, you will be taking all of those profits with you. Remember, you want to hedge your portfolio, no more than 10% any one position or one stock. You want to be safe. There's risks with everything. I will see you on the next video or in the Discord real soon. One love, fam.